It is 8:30, and I'm going to call this Finance and Economic Development Committee meeting to order on May 23rd. We have a one-item agenda. Can I get a motion to approve?
Move to approve the agenda as published.
Second.
Been moved and seconded. Is there any discussion? Just to let everyone know, Rick is running a couple minutes late, so thanks for filling in, Shannon. Appreciate it. All in favor of that motion signify by saying aye.
Aye.
Anyone opposed? That motion unanimously carries. We have an agenda, and on our agenda is the first quarter financial report. Troy.
Great, thank you, Mr. Mayor. Good morning, committee. We do have the full details of the first quarter financial report in the packet. Of course, I would appreciate having some time to talk about the kind of the highlights of what happened during the first quarter. I guess I'll start with summarizing. There weren't really any surprises. I mean, things went about how we thought they were, how we projected. So that's the good side for sure. We'll focus this discussion on the general fund as always. Of course, that's the fund that provides the services I think our citizens most identify with: police, parks, streets, that type of thing. So the expenditures for the general fund for the first quarter were just under $13 million. This is an increase of about $2.4 million. About half of that increase had to do with retroactive pay for contract settlements for 2022. So two of our largest labor contracts were settled right at the end of the year or just after the end of the year. So we went a full year without salary adjustments in 2022, which we ended up paying in 2023. So again, about half of that increase has to do with that retroactive pay for 2022. Also affecting the first quarter were significant inflationary increases, especially having to do with cost of living adjustments for those salaries. I know the mayor and myself have both said, our most important asset is our personnel and staff, but it's also the most expensive, and that's certainly impacting the budget. Continues to impact the budget in 2023. So you'll see, if you look at the details of the financial report, there are obviously variances in every area. Any department that does have labor in it, of course, is impacted by that retroactive pay, but I would like to highlight some of the significant variances within that report.
So Troy, I have a real quick question. When it comes to retroactive pay, what happens if an employee left, last year? Do you go back and retroactively pay that employee?
We do.
Even though they're no longer with us?
Yes.
Okay, thank you.
Great question. Starting off with contracted services department, we had about $138,000 increase. This is really a timing difference with our district court charges. In fact, we think that may actually come very close to exceeding budget within that specific service. But as of the first quarter, we hadn't paid any of our, or hadn't been billed, I'll say it that way, any district court charges. But obviously, we're going to be paying district court charges throughout the year. Within the finance department, we had about $155,000 increase. Of course, this is a department that was impacted by the retroactive pay, but we also added 3 positions mid-year in 2022. We had added an accountant, payroll specialist, and a department assistant 2. For the most part, those positions were not filled first quarter last year. They weren't filled until later in the year, so we're not comparing apples to apples in that case. The police department probably is the department that was most impacted by the retroactive pay. Had an overall increase of about $537,000. Salaries and benefits increased about $728,000 within that department. The retroactive pay was about $520,000 within that department. There is another timing difference, actually a decrease in 2023 related to the records management partnership. In the first quarter, we had not paid that partnership fees in 2023, whereas we had in 2022. So that's about $160,000 variance. Within Public Works Parks Maintenance, we had about a $265,000 increase. Again, the retroactive pay impacted that department. But the most significant change within that department is related to the irrigation control upgrade. This is a 4-year phased project. The first year being 2023, that increase was about $176,000. Community and economic development expenditures increased about $429,000. Again, the retroactive pay impacted this department, but I think more importantly, the biggest variance has to do with economic development investments made by the city. We have $200,000 that is being invested in the makerspace and about $119,000 invested into the Lacey Midtown area. We undergrounded some utilities to obviously kind of beautify that area. Looking at the street fund, we had an increase of about $183,000. The most significant variance was a $68,000 increase due to LED light replacements. We are of course continuing to replace the old lighting with the new energy efficient LED lamp heads. Switching.
Project. It seems like we've been doing.
You were cut off there a little.
How far along are we on the LED conversion? It seems like we've been doing it for a while.
It's 7 or 8 years. I think we all kind of lost track, but we're approaching that 10-year. We had a 10-year phased approach. I think it's my best guess. I think this is our 8th year, 2023, but I'd be glad to be corrected by either Rick or Scott, who's in the audience, but it's 7 or 8 years. So we're just about close to that.
So, if you recall, we weren't replacing 10% of the lights per year programmatically. We were replacing bulbs as they failed.
Yep.
So I'd say there's probably another 4 years before they're totally replaced. But, you can see as you drive down the road, tell the differences that, that the majority of the bulbs now are the LEDs as opposed to high pressure sodium. But just in terms of the rate of failure, it may be another 4 years before they're completely replaced.
Okay, thanks.
Thank you for the assist, Scott. Looking at the revenue side of the ledger for the general fund revenues were about $13 million for the first quarter. It's about 18% of the amended budget. At the same time last year, revenues were at about 19.7% of the budget. The biggest difference here is really related to federal and state funding that came in for the Veteran Services Hub and the U.S. Veterans Affairs outstation improvements. So that was, definitely the most significant impact. I'm kind of looking at the details, really focusing on our more significant sources of revenue for the general fund. Property taxes, we collected about $212,000. As this committee knows, property taxes are due twice a year, April 30th and October 31st. People tend to pay their property taxes at the very last minute. So those revenues generally come in April, May, and October, November. So this really isn't any change from previous years, but I will point out that property taxes are lower than they were first quarter of last year. And last year we talked about the extremely hot real estate market that was occurring. That's definitely not the case right now. With interest rates, we had 10 straight Federal Reserve interest rates. We went from it went fast, that's for sure. So we saw mortgage rates go from that 3% range up to 6.5–7%. Well, I've been around a little while, and 6.5% mortgage rate still seems good historically, but putting that in perspective in the last 10 years, that's actually very high. So that's definitely impacted real estate sales. What generally happens at a real estate closing is at least 1/2 of the property taxes are usually bought current and prorated at closing. So if there is a house closing or a real estate closing in January, that full first half is paid in January. So I really think the decrease in property tax is a reflection of the slowing of the real estate market. And we've also seen that in our real estate excise taxes, down about 66–67% so far in the first quarter. So certainly those line up in terms of what looks like a slowdown of the real estate market.
But the property taxes will catch up at the normal times then, just because just with that not being sold, so that you didn't have the early transactions, but you'll still get the March and
Correct.
October.
Correct. It's a timing issue.
Troy, the more concerning of those two numbers then, of course, is the REIT.
Yeah.
Right, and considering we're using REIT to repay for the police station, so does this give you pause at all about the future repayment ability of using REIT with the police station?
Not yet. We've seen very high, very significant real estate excise collections in the last 5 to 7 years. In fact, I think we collected $5.5 million for 2023, which is quite a bit, or 22, I'm sorry. It's quite a bit higher than what we budget, which is that $2.5 million range. So what we've seen in the first quarter so far in real estate excise tax brings us right in at that budget projection. So we're still in that $2.5 million range. I would be most comfortable with saying $2.5 million. We kind of targeted half of real estate excise tax for that debt payment. So as long as we stay in that range, our comfort level will certainly stay at that level. But we get below 2 million, that's where it really starts to, I think, harm, and we would have concerns about our ability to keep up on arterial streets and street improvements. So, but at this point, we're still okay. So we'll continue to keep a very close eye on this as we move forward.
Great.
Sales tax, I won't spend a lot of time here just because the council sees my monthly reports. We're still collecting at a higher rate than last year through the first quarter, about 2.1% higher. I do have detailed information within the report. What's really carrying sales tax so far in 2023, and it isn't any different than what we've seen, I would say, in the last 2 years, it's construction and restaurants are the big factors. I think what's really shifted in sales tax, or maybe not sales tax, but just in terms of the economy, is we're seeing more and more service industry increases. So for the most part, services are not sales tax, subject to sales tax, but we're seeing that in our B&O tax collections. So we are seeing a little bit higher B&O tax increases. You would think that you would have roughly the same tax base, but the difference really is that service segment of B&O tax. So in B&O tax, we're seeing about a 6.5% increase. So, coming in about double of what we're seeing in sales tax. Utility tax as a whole is about 105,000 higher through the first quarter. Natural gas is the segment that is seeing the most significant increase of about 68,000. I will note that telephone utility tax decreased again, about 25,000 or so. I thought we were at the bottom of the impact of folks switching from landline phones to mobile phones, but perhaps not. So we'll continue to watch that. Again, as a reminder to the committee and the audience, as we see a shift to mobile devices, that is all. If you think about your personal use, it's mostly data, texting, internet, social media, and of course, anything related to data, there's a federal exemption to local utility tax on all of that. So, that's a big part of our mobile device monthly bills. So we'll continue to watch that as well.
Do we have any suggestions on how we should replace that revenue source? I mean, we know it's disappearing. Is there another revenue source we can take a look at to maybe offset it?
Well, specifically within utility tax, we are at the statutory limit of 6%, but that 6% limit does not apply to water, sewer, and stormwater. The council has, full discretion on that rate, so that is one option. You could increase those three utilities higher than 6%. I will remind the council that we do have an additional surcharge utility tax on water that we took action many years ago to deal with the Lane versus Seattle fire flow issue. At some point, I would like to come back to the council and remove that tax. We, of course, in the Lacey way, we acted very swiftly in terms of dealing with that Supreme Court decision, but the state legislature, of course, came in about 12 months later and fixed that. And we just haven't, as a city, gone back to fix that. But, you know, that is certainly an area the council can consider. You know, there are a number of voter approved options for the council, but in terms of the council action, I think utility tax is, you know, probably the, you know, the area. It makes sense if you're trying to replace utility tax.
Yeah, the other question I have is on B&O tax. Obviously, Lacey still does it, you know, by hand on an old form. Several cities have changed to an online form, which of course requires less labor for us, which is expensive and more convenient. I know I brought this up in the past, but you know, where are we at looking at trying to do B&O tax online?
Yeah, honestly, that's hasn't been something we've had the capacity to look at yet. You know, we did look at, it was probably about 5 years ago. We did look at that File Local. I think they're a corporation, and maybe a nonprofit, but you know, it's the 5 big cities has a service in which you could do that.
No, but the city of Yelm came up with their own program, and I talked to them, and they said they'd be willing to talk to you, and we might be able to, you know, share their program, their online program. It's very straightforward. And the city of Bremerton also has a program that they developed. They both developed them in-house, and so I think it's for, you know, a quick phone call and how did you set this up and what, you know, can we what would it take for us to have access to your program? I think it would be worth it. Otherwise, you know, we're doing all this by hand. It's not only the business owner has to do it by hand, but then we have to receive it and enter it by hand. So I think it's worth at least a phone call to see, you know, how long did it take, what, you know, where the pitfall, you know, all those things. And since Yelm's right here local, it shouldn't be too hard. And we do have a pretty good crossover between Yelm and the city of Lacey.
Absolutely. I believe Tumwater is in that same situation where they have their own, I don't know if it's an in-house solution of that, but I actually have a Zoom lunch meeting on Thursday with the local finance managers. So I could certainly raise that at that time. So
yeah, I'd appreciate it. It's one of those things that it's so annoying to have to do. And so it'd be nice if we could do it online.
Sure. Yeah, I'm smiling because about a year ago, I received a phone call from a business making the plea not to go to an online service. And it was actually a fairly big national company. I was quite surprised. They had their own spreadsheet set up. So another city, I don't know who it was, they do business in, recently switched to an online service, and they didn't want to have to redo everything that they do in-house in terms to do file their B&O tax. So, but I agree. I think the online, you know, version is the way to go. I think, you know, really what we need is some coordination with the state as well. You know, and I think, Mr. Mayor, you and I have had those discussions too. You're filling out the same information to at least two different entities if you're doing business in Washington State. So
yeah,
there's definitely some efficiencies to be gained there.
Yeah, well, yeah, it'd be nice. You're already paying B&O tax to state. I don't know why they can't just send Lacey's portion at the same time.
Yep, good point. Looking at admission tax and gambling tax, we saw increases in the first quarter in both these areas. A little bit difference in terms of what I would estimate in being fully recovered. Admissions tax has not fully recovered from the pandemic years, but gambling tax certainly appears to have fully recovered. In fact, they're exceeding so far the 2019 activity.
Admission taxes is the movie theaters, that kind of thing, right?
Yes.
That may never fully recover. A lot of that, I think, doesn't have to do with just the pandemic, but just the streaming. So many movies and things are now not coming out in the theater, they're coming straight to TV, right? HBO Max or Netflix or Prime or all those. So that will likely not ever recover.
Yeah, I suspect that to be the case as well. It's just a change in behavior.
Yep.
So, and I don't see that changing. You're right. New releases are going straight to streaming, and even those releases that go to the theater get to streaming very quickly.
Sometimes a couple of weeks after they hit the theater. Yeah, it's really quick.
And it's also to keep track of what are the new releases at the theaters and what's, it's just, what's playing is not on people's radar either.
Looking at, I think a couple indicators for the future, if you look at, building permits and plan check fees. Of course, when we look at that activity, that typically results in higher property tax, sales tax, utility tax when it comes to development. We are seeing first quarter increases for building permits of about $92,000. Plan check fees are up about $47,000. So hopefully that's a good indicator for the future in terms of what development activity may look like here in the next 12 months or so. A real significant increase in terms of revenues for the general fund have to do with our intergovernmental service charges, have an increase of about $619,000. This is primarily related to engineering services, internal engineering services, design services. So we have increased our personnel in terms of engineering and design and project management. These expenses are billed to the capital funds, so arterial streets and the utility capital funds. So it's kind of like having internal design services that are billed out. So we're seeing those on the expenditure side, we're seeing those coming back in terms of this revenue source. I did mention the grant reimbursements for the Veteran Services Hub and the U.S. Veteran Affairs Outstation Center. So we are seeing that affect a couple different areas, the other grants line item and as well as other miscellaneous. So we had kind of an offsetting impact there. We had a decrease to grants of about 1.9 million, but we had an increase in the other miscellaneous of about 581,000. So, but that nets out to an overall decrease in terms of revenues.
What is considered other miscellaneous revenue?
Well, that's everything else. That's what that is. We try not to use that. In fact, that should be a very last resort. We want to be specific as we can. But this was a state reimbursement that really didn't fit anywhere else. It wasn't a grant. So yeah, we do try not to use that just because it's not helpful, obviously, to anyone in terms of a reporting perspective. But believe me, we tried to find another category for that to fit in, but just couldn't. I mean, that's typically a 10,000, 15,000 a year line item. So, but yeah, believe me, we tried to have a better reporting of that, but just couldn't. So
is that a question the state auditor would have a better idea of, like how we should categorize that?
Well, I hope not, because we want correct. But we are using the state auditor's category system. I mean, we do have the BARS codes, which is budgeting, accounting, and reporting standards. So we are using their codes. So it's a very detailed system. So we, best to our interpretation, couldn't make it fit anywhere else. So fingers crossed that the auditors agree with us, as we head into our upcoming audit here next month. But yeah, that's a really good point, Mr. Mayor. We do not like to report on that, but we couldn't find a better way to do that.
Okay.
And finally, under general fund revenues, interest earnings increased about $157,000. Like I said, there's been a historic increase to the Federal Reserve overnight rate. If you look back February 2022, the earnings rate was basically zero. The overnight rate was about 0.1%. The overnight rate as of March 2023 was 4.9%. So huge change in terms of that earnings rate. And of course, falling outside of the first quarter, as we know, the May meeting, they increased the rates another 0.25%. So we're currently sitting at a 5.25% overnight
Wow.
rate essentially.
It's an incredible difference in a short time.
It
Well,
is.
0.1 to over 5.
I put for me personally, I put there's a new rates at my bank. It was 3.49%. I couldn't believe it. It was so high. And I transferred, I closed my savings account, put all of my money into this new account, and I earned more interest in 1 month than I have in the past 3 years. In 1 month. It just goes to show you how, I mean, it was like we were getting 0.009 or before.
We're
Now,
getting nothing on our money.
it's like, I'm like, woohoo! I can't believe I can make money off of interest these days. I haven't seen it in such a long time.
Right. Yeah, that's certainly the positive side of the rates going up at this historic rate. But the downside is the Federal Reserve is trying to slow down the economy. So,
Yeah.
You kind of have to take the good with the bad in that situation. Just real quick comments on the utilities, water, wastewater, and stormwater. Again, no surprises, but I will point out in water expenditures, we had about a $1.1 million increase. A lot of this has to do with the supply chain issue related to our water meters and the transmission units that go onto those meters. And you heard this during the carryover budget amendment. We basically went about 1.5 years without receiving those supplies, and they're just now coming in. So we did have a carryover to the budget of about $700,000. And so far in the first quarter, we've made about $578,000 in payments to those back orders being received. So that's kind of the major difference within the 3 utilities. I'm kind of wrapping this up. I kind of talked about the Federal Reserve actions. Again, in May, we had a 0.25% increase. There is some momentum or some thoughts that there'll be another increase in June. I think even a week ago, 2 weeks ago, I think most economists would have said there's a very likely chance that we would see a pause in June, but with inflation still being twice as high as the Federal Reserve target and another strong jobs report, depends who you ask out there, but anywhere between a 20 and 40% chance of another 0.25% increase come mid-June. So, obviously the Fed will watch the economic indicators, but there is some momentum and some thought out there that there may be another rate increase coming in another 3 weeks or so. It's interesting when you look at inflation, if you look locally, and locally being Seattle, because that's the closest metropolitan area that inflation is measured by the Bureau of Labor Statistics. Seattle area typically lags behind the national inflation trends, both as going into recessions, coming out of recessions. There's typically a lag, and that's no different this time. If you look at the April inflation, which is the last time the Seattle inflation was released, the Seattle inflation was about 6.9%. The national level was 4.9%. So, we're still in Seattle seeing high inflation rates. So whenever that bottoms out at the national level, we can expect that to be a lag in Seattle. So we'll continue to see those inflationary pressures here locally. So that's something different that, we'll hear in terms of hearing national news. The interesting thing when you think about inflation and you look at sales tax, we still had increases, assuming that businesses have had to raise the prices because of their inflationary pressures. That activity could be lagging behind just because the increase of the sales tax isn't keeping up with inflation. So it's something we'll definitely want to keep in mind, especially as we start to think about the 2024 budget and how that may impact and when this economy may actually bottom out if it does. I think economists out there are still thinking a mild recession towards the end of 2023. The more significant recession indicators are still showing that, the 2-year versus 10-year treasury rate is still inverted, has been inverted for many months. So, that isn't changing. So, we'll obviously keep that in mind as we look forward. But, again, I think the good news in the first quarter report is, again, no surprises. Expenditures are happening as we thought and revenues are coming in as we predicted. So with that, I'll turn it back over to the committee for any further questions.
I think the one thing that's different this time around, we're talking about inflation and are we going to hit a recession, so on and so forth, is that wages have kept up, right? Even we've seen it in Lacey, we retroactively have had pay, right? So more people have money in their pockets compared to past recessions where, inflation goes up, yet wages are stagnant, and that's where things fall apart, right? Things cost more, you don't have the ability to pay for them, and that's you hit a major recession that way. I don't see wages backing off at this point, not in the private sector. I mean, I need employees. And I'm sort of,
They're hard to find these days.
they're hard to find, right? I'm not seeing a huge influx of employees. There are a ton of employees out there that I could hire, but they aren't, I can't legally hire them, right? And so if we could figure out our that side, it would certainly help. But right now you're stuck paying, trying to find good employees, and you pay them, and so I don't see that changing for a while. That's why I think the federal government is sort of missing the point here, and raising interest rates is not necessarily helping the situation. They should be doing other things to do that. So, but that's just my 2 cents. I think we're once again, I think we're in a good position financially. I am a little concerned about REIT. I'm more concerned about REIT long term if we stay stagnant without annexation. Another reason why I'll talk about annexation. If we can get ahead of the buildable lands, then we'll be just fine. But if we don't get a handle on that, and we're stuck within our current boundaries, then the future growth of REIT is, I think, a little bit concerning. And so it's just another thing to think about when we think about annexation. So that's my 2 cents. Anything else from this committee? Okay, well, with that, we've reached the end of our agenda. So without objection, I'll call this meeting adjourned.